value of money,
conference will now be recorded.
any particular topic you want me to explain, revisit those concepts, just let me know. I can do it before I go ahead with the next topic. Just type next if you're okay to go with the next topic. Okay. How many of you are aware of income statement? Type I for income statement. Okay, fantastic. So most of them are aware of income statement. So what I will do is we will revisit those concepts, just a revision, and so that everybody are on the same line. Okay. First thing is, what is this income statement? Okay, which I'm going to explain you. First thing, please understand, friends. Income statement is one of the three financial statement, one being balance sheet, the other one being cash flow statement. What is the purpose of income statement? It presents information on financial results of a company. What is it? Company's business activities over a period of time. The income statement will communicate how much revenue the company generated during a period and how much cost it incurred in connection with generating that revenue. That is all about income statement. Is that okay? So it talks about all the incomings and outgoings in the company. That is all about income statement. It is as simple as that, to keep it in a simple term. So within the income statement, there's a huge information available. A person who is knowledgeable in reading the financial statement can find in a company's income statement, there's a lot of information about its return on investment, what is the risk the company is taking, what is the financial flexibility the company has, or what is its operating capabilities. So many information it can collect by just reading the income statement. So don't you think is income statement very useful for us? So it could be return on investment, it could be risk, it could be financial flexibility or operation capabilities. It will tell me all of this information by just reading the financial statement. Return on investment is what? Is a measure of firms, company's overall performance. What is risk? It's an uncertainty associated for the future. What is financial flexibility? It's a firm's ability to adapt to the new problems. Like suddenly COVID came into picture. Did the company has the flexibility to support its employees or remove their employees from the company? That's something called finance flexibility. What is operating capability? It relates to firm's ability to maintain one level of operations, a good level of operations. So that is all about income statement. So my question to you is, according to you, what is the top line of the business? According to you, what is the top line of the business? Can anyone tell me? If If I say top line of the business, what is the answer according to you? They also say bottom line of the business. Yes, you are absolutely correct. Revenue, or sometimes they call it as sales. What about the bottom line? Profit or loss, or loss. So whatever happens between the top and the bottom line is all about income statement. So the generic formula of income statement is this: revenue minus expenses is equal to profit or loss. Please note down this. Now you might ask, so what is the use of this income statement? There are two main groups of people who uses financial statement. One is the internal users, the other one is external users. Internal users include company management, board of directors, who use this information to analyze business, where they are standing, and they make decision in order to turn to profit. They can also act on any concerns regarding low cash flow. Who are external users? They comprise of investors, creditors, competitors. They check whether the company is in the position to grow. Will it be profitable in future? So they can decide if they can want to invest in this company. Creditors who have given loan to the company, they can check the income statement and find out if they have enough money to pay back their loan. Competitors can use the income statement details to check whether they are above the competitors or below the competitors. So many things can happen, and the importance of the income statement. But what all the factors includes in the income statement is what we're going to learn today. What all the major components. Okay. So first line of item, as I said, is called revenue, or it is also called as sales. What do you mean by revenue? What do you mean by sales? Is what we have to understand. Everybody is aware of it, but I'm just going to revise a little bit so that we're on the same page. This is the first section on the income statement. It gives you the summary of what company is selling, in return what money they are making. So it can be classified into two types. One is operating revenue, the other one is non-operating revenue. What is operating revenue? It refers to the revenue gained by a company by performing primary activities. Like if you're a laptop shop, you're selling a laptop, you're making a revenue. Tomorrow, if you have a grocery shop, you're selling a grocery. You have an airline industry, you're selling tickets. So that is nothing but the primary activities. That is, my friend, is called revenue or sales. The formula for revenue or the sales is, I'll just type revenue equals selling price into QS. Any idea what is QS? Revenue is nothing but selling price into quantity sold. Is this clear? The first line of item. So let's take example. You are in a hotel industry. They have ordered, okay, say for example, pasta. So pasta would be price of 140 rupees or 200 rupees. So somebody has ordered, they have paid, which a sale has happened. That's a revenue for you. But how did you make pasta? You needed all the ingredients, right? It could be cheese, oregano, okay, so many other things you need, for which you had to pay money and buy those ingredients. So that ingredients was directly related to pasta. So that, my friend, the next line of item is called as COGS. What is a what is a full form of COGS? Cost of goods sold. The formula for this is COGS is equal to same thing as revenue. Instead of selling price, it is cost price into quantity sold. Remember, I am not recording the cost which I am using for burger. Only the cost which is directly related to revenue is called COGS. So only related to ingredients of pasta, I'll have to record it in COGS. I don't have to worry about other items because I am recording revenue only for pasta. So that is called revenue minus COGS. And when you do that, you will get, which is called as gross profit. I hope you understood. I will repeat again and again, but I want you to be in it. So cost of goods is nothing but total cost of sales or services referred to as cost incurred to manufacture goods or services. Okay, keep in mind that it only includes the cost of the product which you sell. Okay, that is called as cost of goods sold. And cost of goods sold is also called as direct cost. Next, minus OPEX. Any idea what is OPEX? What is the meaning of OPEX? Any idea what is the meaning of OPEX? Yes, it is called as operating expenses. What is this operating expenses? This is called as indirect expenses. Why is it called indirect expenses? Okay. Now, what does that come under operating expenses? I have a restaurant, I told you. Don't you think I need to spend money on rent, salary, transportation, legal fees, stationaries? Don't you think all this is important for me? Those are all nothing but operational expenses. Why is it called indirect expenses? Please understand this OPEX is a cost which is not related to your revenue. Agreed? For example, you did not sell anything in the month of August. So that means revenue is zero. What happens to your COGS? If revenue is zero, what happens to your COGS? Obviously, it is zero because COGS is directly related to revenue. But don't you think under OPEX, you still have to pay rent, You still have to pay salary. You still have to pay some like commission. You need to pay tax. So nowhere, even if your revenue is zero, you still end up paying all of this. And that is why, my friends, OPEX is called as indirect expenses. So gross profit minus OPEX is what you will get as EBITDA. Have you heard of EBITDA? What's the full form of EBITDA? It's called as earning before interest, tax, depreciation, and amortization. Since you're in commerce background, you're commerce students, I don't think this is anything difficult for you. So gross profit minus OPEX you will get as EBITDA. Type S. Until here, all of you have understood.
So what is the
Next
last
line,
word?
amortization. Amortization. I'll explain that. The next line of item is called as depreciation, minus depreciation. Actually, it is not just depreciation, it is minus D and A. Means depreciation and amortization. Now, what is this? Now, what is this D and A? Depreciation and amortization. Okay. Accounting terms, you need to understand that. Okay. So I'll explain in a simple English. Depreciation is a process of deducting the total cost of something which is very expensive you have bought for your business. Instead of doing everything in one year tax year, you write off parts of it over the time. When you depreciate assets, you can plan how much money is written off each year, giving you more control over the finance. Now, what is that you will buy things on when you're working in a company? Don't you think you need some fixed assets? You need some fixed assets to run your company. What are those fixed assets? It could be a vehicle, it could be some land, it could be some equipment, it could be some office furniture, it could be a computer. Those are all fixed assets. Now assume that you have bought, I'll remove everything, you bought a vehicle, and that delivery vehicle. The delivery vehicle is 5 lakhs. You are going to use this car for 5 years. So in the accounting, they will say, why do you need to record the entire 5 lakhs as cost? Why do you need to record it? Because if you record entire 5 lakhs in this year, maybe it will be lost for me. But I'm going to use it for the remaining 4 years also. So it is not fair for me to put load on the same year, entire 5 lakhs. So what I will do, let me distribute the cost for next 5 years, because I'm going to use it for next 5 years. So this year, how much can I account for? How much can I account for? Exactly. So year 1, 1 lakh. Year 2, year 3, year 4, year 5. So like that, 1 lakh, 1 lakh, 1 lakh, 1 lakh. So that the load on mine will reduce. So that is what is called as a depreciation, my friends. Okay, the number of years over which you depreciate something is determined by its useful years. Laptop for 5 years, vehicle for 10 years. Okay, so that is what depreciation happens. If you divide the cost of an asset over the number of years, that's how the depreciation comes into picture. Now, anything with respect to fixed asset, depreciation comes into picture. Anything with non-tangible assets. Now, what do you mean by non-tangible? You cannot touch. You can only feel, or you call intangible. Those are all nothing but amortization. Like what? Franchise, goodwill, copyright. Yeah, goodwill is nothing but reputation. Yeah, or it could be trademark, patent. Very good. So those will come under amortization. Depreciation will come under tangible assets. Like what did I say? Vehicle, equipment, land. Right? Those are all will come under tangible, which you can touch. Remember, only for land, there is no depreciation because it is always up. It only appreciate. It will never depreciate. So land is something which we don't record into depreciation. Whereas others like vehicle, over the period of time, wear and tear, like your second-hand cars are much lesser than the new cars, just like that. But your land, the older it gets, the higher the price it is. So that's where depreciation and amortization comes into picture. So that is. So when I do EBITDA minus depreciation, I will get it as EBIT because I am subtracting DA. So I'm only getting EBIT. So this is called as earning before interest and taxes. This is also called as operating income. It's called operating income. Any doubts in this until here? I know I'm going little slow. Others who have already learned this, it might be little monotonous or it might be boring, but see if something new you have learned. So you have removed depreciation and amortization. Now I will remove something called as interest expense. Then I will get EBT. So I've removed I here. I stands for interest. Now why do you think I need to subtract with interest expense? See, interest expense is a cost of borrowing money during a specific period of time. Interest expense is occurring daily, but you are recording it for monthly or quarterly or annually. See, interest expense is the total amount a business accumulates in interest on its loan. It's a cost of borrowing funds. Businesses take out loans to add inventory, buy property, buy equipment, or pay bills. Interest expense is most important because if it is too high, it can significantly cut your company's profit. It increase in interest rate can also hurt your business, especially one with the larger loans. Business with more assets are going to have more loans for which they have to pay more interest and more interest expenses. So you have to be careful to understand if the company has fixed asset, there could be plus point as well as minus point, because a lot of companies will not pay money from their own pocket. They will always go for a loan. So if they want to buy a land or a factory, or they have to buy a new equipment, okay, they need to buy some three loading vehicles. Okay, so they need to pay some advance payments. So that means they need money where it meant. So that time they will go for loan. So say if they go loan for say rupees 25 lakhs, okay, at a rate of 10%. So 2.5 lakhs they have to pay for the interest expense. So that is what will be recorded as an expenditure, which will be coming under interest expenses. And this EBT is called as earning before interest. Finally, what is the last term? Sorry, not EBIT, it is EBT, earning before tax. Now, what is the final thing? Tax. Obviously, whatever money you need to pay to the government. Whatever the tax depends upon the 30% or what is the condition. Finally, whatever money, and remember, you pay tax only when you get profit. If you're in loss, why would you pay tax? So that's one thing, keep in the mind. So when you subtract this EBT minus tax, you will get PAT slash NI. Now what is this? PAT means profit after tax, is also called as net income. This is complete of income statement. But what is this net income? I want to explain to you. Friends, net income is the amount of money that company has after all its expenses paid. You can think of net profit like your paycheck. It's the money left after all the taxes and benefits are subtracted. It is on the last line of income statement. It's like take home or bottom line, net earnings. Those are all different names. Net profit is very important. Okay, a low or negative net profit is an indicator of various issues. Maybe sales are bad, poor management of expenses, poor marketing, customer services are bad. So high or positive net profit can lead to complete opposite favorable variables. Investors use net profit to determine whether the company is worth in risking for investment. Creditors use it to determine whether they should offer a loan to this company or not. As a business owner, net profit helps you to assess where you stand financially compared to your competitors. So net profit plays a very important role. This is what is the entire formula of income statement. So I have explained you everything about income statement. Now you please open up the sheet which I had shared you in the WhatsApp. Can you start solving from the first sheet, income statement 1? Click on enable editing. Read the problem and can you give me the answer for net income? I'll give you 10 minutes time. Are you solving it or you want my help? Should I solve it first problem? Okay. Okay, I'll wait. I'll wait. Okay, some of you are giving the answers. Let me show you, since it's the first problem. What does this says? Company ABC, where number of pens sold was 800 at a price of rupees 200. So I clearly told you what is the formula of sales? Selling price into quantity sold. That is a formula. So what is he says? He sold how many pens? 800 pens. So that is the quantity that he sold. What is the price which he sold for each pen? 200 rupees. Which is 16. Then what is gross profit? This also same thing. Quantity sold into cost price. Now question is, how much did he, what is the cost price? Can you tell me what is the cost price here? 50 into 50 into what I should do to get the OGS? 50 into no, wrong. It is not 900. Think again. Friends, what did I say? It is cost price into quantity sold. How many did you sell? 800. So don't you think it should be 800 into cost price, which is 50 rupees? See, it doesn't matter whether he goes to the market, buy 2000 pens, 3000 pens, 4000 pens. It doesn't matter for me. All it matters is when I am calculating COGS, how much did he sell? Only that much I will record in COGS. And how much did he sell? 800 pence into cost price is 50. That's all I care about. That is why it's called direct expenditure. Directly it is related to revenue. Now equals sales minus COGS. Okay, please don't keep quiet if you have not understood. Ask me. Next one is OPEX. OPEX means operating expenditure. These are all indirect expenditure. What is that? They have directly given us, okay, rupees 2,000 for salary, 5,000 for marketing expenditure. ME means marketing expenditure, and 3,000 for sorry, the other way. So this is 2,000, this is 5,000, this is 3,000. Now what is total OPEX? 10,000. Now what is the formula of EBITDA? Gross profit minus OPEX. If you observe, what is the EBITDA? It is gross profit minus OPEX. That is what I've done here. Equals, what is my gross profit? This one. Minus, what is my OPEX? This one. Next is depreciation and amortization. What is the value of depreciation you got? 20,000. Okay. The value of the car is how much? 2 lakhs. And it clearly says that car will be used for 10 years. So what am I supposed to do? I'm going to distribute this 2 lakhs consistently for next 10 years. So what should I do? Equals 2 lakhs divided by 10. 20,000. Next year 20. Next year 20. That year 20. That year 20. Like that, if I go in the end of 10th year, it will be 2 lakhs. So this year I'm only recording for 20,000. Next is EBIT. What is the formula of EBIT? EBITDA minus depreciation and amortization. Next is interest expenses. What is the value you got for interest expense? Let us see whether the answer is correct or not. See, interest expenses is based on the loan which you have taken. How much loan have you taken? You have taken a loan of rupees 2 lakhs. What is the interest rate for that? They are charging 8% annually. So if you, that means every year 8% of 2 lakhs you have to keep on paying as a interest expenses. So what can I do here? Equals rate of interest is 8% into what is the loan amount you have taken? 2 lakhs. Okay, I'll share it. No problem. I'll save it. Then it will be EBT. What is the formula of EBT? EBIT minus interest expense. That's what it says, right? EBIT minus interest expenses is what you get, EBT. Next is minus tax. How much is tax? They have given 30%. Tax is at 30%. And remember the formula is EBT into tax rate. Okay. Always EBT into tax rate. What is EBT? 74,000 into what is tax rate? 30%, which is given in the problem. Enter. So then what is profit after tax? Equals 74,000 minus tax is 51,800. So none of you give me the right answer. Where did you all go wrong? Can you tell me? Just put up in the chat box. Where did you go wrong? Okay, depreciation. Okay, some of you in COGS. Hope at least by my explanation, you were able to understand. Okay, one of you is asking, how did I get 16,000? See, interest expenses. See, why are you paying interest expense? Why is it an expenditure? Because you have taken loan. How much loan you have taken? If you look at the problem, to run this business, ABC purchased a car of worth 2 lakhs through a loan. If you see the problem. So that means I've taken a loan of 2 lakhs. But you think bank will give you for free? You have to pay rate of interest 8% every year. So that is nothing but equals 2 lakhs into 8%. Please respond if you understood how I got 16. So our net income or profit after tax is 51,800. Type 1 if you have understood everything and completed the problem along with me. Now I hope you don't do the same mistake. Try solving the second one. A small formula change which I have to explain, which I forgot to explain. Okay, you want me to do EBITDA formula. Okay, hold on, friends. One of your friend has asked how to do EBITDA. Okay, look at the screen. Now, what is EBITDA formula? We look at it, gross profit minus OPEX. We already have gross profit, right? If you look at the sheet, what is my gross profit? This one. What is my OPEX? Under OPEX, what they have given 2,000, 5,000, 3,000. So total OPEX is 10,000. So what will be EBITDA? 12,000 minus 10,000. Sorry, 1,20,000 minus 10,000. You got 1,10,000. How did I get this 10,000? Rent, salary, marketing expenditure, I added. Hope you got it. So you have to have the formula very easily. Revenue minus COGS is your gross profit. Minus OPEX is your EBITDA. Minus D&A is EBIT. Minus interest expense is EBT. Minus tax. So I hope you note down this. So then it will be easy for you to solve the problem. Now for the second problem, what I missed out is under COGS. The another formula of COGS is equal to opening stock plus purchases minus closing stock. Why do you need this formula? You need this formula if you do not know how many pens was sold. In the previous problem, they have told 800 pens was sold. But what if you are not aware of how many pens was sold? How do you calculate it? You calculate it by using this formula. Okay, so I'll give you an example. January 1st, say 2005, you had in your storeroom 100 pens. Then in say in April 15th, 2005, you purchased another 100 pens. When your end of year December 31st, 2005, when you're taking stock, You found out in your storeroom you had only 50 pence left. So by this, can you tell me how many pence you have sold in the year 2005? Can you tell me? How many pence you sold? See, you got it. Until April 15th, you had 100 plus 100, which is nothing but 200 pence. Suddenly your storeroom have only 50 pence. That means what happened to the remaining 150 pence? Means sold. So that is what is a formula over here. Opening stock. What is the opening stock you had? COGS is equal. What is opening stock? 100 plus purchases another 100 minus what is your closing stock, which is 50. So COGS will be 150 pence into cost price. So this is a formula I missed out to explain to you that you needed for the second problem. So start solving which I missed out and give me the answer. That was fast. Let us see whether you people are correct or not. So sales, paste it here. COGS will be equal to beginning inventory plus material purchase minus ending inventory. Then gross profit will be this minus this. Then what is my OPEX? R&D expenditure, repairs and maintenance, salaries, lease payment, advertising expenses. So what is my OPEX? This one. So EBITDA will be gross profit minus OPEX. And what is my DA? Depreciation and amortization. So EBIT will be EBITDA minus D&A. Then interest expense will be 64,000. So your EBT will be EBIT minus interest. Then tax is nothing but directly given 51,000. So EBT minus tax. Then tax sorry, EBT minus, okay, I missed out something. This is where it is. Okay, this is the answer. I think more or less all of you have got the same answer. Any doubts in this? Not bad. All of you have got the same answer. Very nice. Okay. I'll give you just 2 minutes time. Try solving the question number 3, 3 and 4. So I'll give you 15 minutes time. Solve 3 and 4. Any doubts? You want me to solve the third one? I think third one is a mistake is there. Yeah, third one there is a mistake. Just a minute, I'll check. Problem is not correct. Uh, okay, it's not extracting. 1 second. Okay. The first year revenue is 900. Yeah, now start solving. I'll give you 5 more minutes. Try solving. Okay, I'll solve it, friends. I think you have done enough now. Now, revenue increment by 8% annually. Okay, let me check if you are giving me answers. Let me check if it is right or not. 900, 350 increment every year by 8%. So how do I calculate the formula? Anyone knows? From last year to this year, it has increased by 8%. So how do I calculate? What is the formula? Anyone knows the idea? Very good, Mayuri. You're spot on. Equals 900 into 8% plus 900. Take to the edge of the cell, you can just drag it. Same thing, equals this into 12% plus 350. Take to the edge of the cell, drag it. They're all relative reference. So what will be your gross profit? Revenue minus COGS. What will be a total operating expenditure? It will be equals sum of your employee cost, power cost, packaging, advertisement, commission, insurance. So what will be EBITDA? Your gross profit minus your total operating expenditure. What happens to your EBIT? Is nothing but your EBIT minus depreciation. So your EBIT is a loss. What is your interest expense? Which will be equals this minus this 153. And obviously the first year is loss. I'm not going to pay tax. Thus next year is profit into 35%. So your PBT minus tax how many of you got the same answer? Type 3 for the third problem. Okay, great. So all of you are able to do it. I'll go for the fourth one. Fourth one, what they have done, no template. We only have to do everything. So Pankaj Traders purchased 100 tables for rupees 500, sold it for rupees 750. So according to you, what is the sales? Can you tell me what is the sales? No, that is quantity sold. Is nothing but 750 into it is into 100. Okay, so what is COGS? 500, which is the cost price, into 100. So what will be your gross profit? Sales minus. Okay. Next, what is your OPEX? Rent, staff, salary is 2000. So it will be this minus 2000, which is your EBITDA. What is depreciation and amortization? 3000. So this will be minus this. Then what is your interest? 10,000. Rate of interest is 10%. 1 second, hold on. Okay, so it will be 10,000 into 10%. So this will be EBIT minus interest, 19,000. Finally, 19,000 into 25% tax rate. And then 19,000 minus 475. How many of you got this answer? Can you solve the last one? One more.
Sir,
Yeah, tell me.
in last question, we should not subtract dividend.
Sorry, there was a voice break. I missed you. Voice. Maybe can you type it?
Sir,
Yeah. Okay. I have not taken dividend for time being because I've not explained you about dividend yet. So that's why I've not taken, but this is an extra item which I've not thought. I will be teaching you when it comes to balance sheet. Right now, I'm not teaching you. You should be doing ideally, but for now, whatever I have taught, just a practice for it. It's good you found out that we missed this, but I'll come back to this when we do it in the coming chapters. Now, question number 5, solve it. Okay, since that thing came, I will explain it so that it doesn't look like I'm not completed. Everyone, please observe the screen. Once you have profit, this will tell how much money you have. How much money you have. Please stop solving the question number 5. First, I'll explain this. How much money you have. Frankly speaking, this money belongs to whom? Can anyone tell? This money belongs to whom? It belongs to shareholders, not to the company. It belongs to the shareholders. It does not belong to, means the people who have invested in this company. They have every right to take back this money. You know that? So it does not belong to company. It belongs to shareholders. And remember, company is working for shareholders. So company decides whatever money it makes, some amount it will pay back to the shareholders. And that, my friend, is called as dividends. Okay, so some portion paid to shareholders from net income is nothing but dividends. And they will not pay fully 20%, 30%, 40% of the net income. So it will be profit after tax minus dividends. After everything, even giving off to some money to shareholders, can you tell me what is the next line of item? Anyone knows what is the next line of item? after you pay back dividends to your shareholders. So for example, say you made a net income of 5 lakhs. In that you paid 3 lakhs to shareholders. So you have still 2 lakhs pending. The 2 lakhs is called what? Not profit. Excellent, very good. It is called as reserve and surplus. It is also called as retained earnings. It is also called as retained profit. And this line of item, my friends, will go and sit in balance sheet. And that is what we will be learning in the tomorrow's class. Because this is actually, frankly speaking, this is not a income statement line of item. That's why I did not explain it to you. Okay. But anyway, the topic, the question came here, right? So that means if I go back to the question number 4, this is my net income. How much money I will be paying to the shareholders according to the above problem? How much percentage of that income I'll be paying to the shareholders, which is nothing but 14250 into dividend is 20%. So this is 2850, which will be paid to the shareholders. So remaining money will go to line of item, which is reserve and surplus, to balance sheet. This minus this. This will go to your balance sheet, which is nothing but retained earnings. Am I clear with this new concept? Now you have last 5 minutes left. I'll wait for your answer. On which equipment we have to apply Okay, it's a good question you have asked. They should give, right? They're not given it. Okay, so I'll give you the depreciation value. So in this case, they have already given depreciation. I will share it with you. And they've also given interest net. Please look at the screen now. Make some changes. Let me try. Initial sales volume is 10,000 into sale price is 125. And every year the revenue will be increased by 15%. So equals this into 15% plus this. Now, COGS will be total sales volume into cost price. This will increase by 20%. So gross profit will be sales minus COGS. Now, selling and administration cost means operating expenses. They're saying it is 25% into revenue per year. So revenue. So EBITDA will be gross profit minus,
Excuse me, sir.
yeah, tell me.
The units sold is 1 lakh. I think you put 10 extra.
No, it's correct only. I've selected the cell. Check from your end. EBIT will be EBITDA minus depreciation. Already given. Next is EBIT minus interest expense. Already given. equal EBT into 30%. All a profit, so all will be taxable. Finally, profit after tax will be EBT minus tax. Looks like only Nandini has given the right answer. You might get a doubt in selling and administrative cost. It says 25%. If you just take your cursor here, it says sales, selling and administrative cost are 25% of revenues. So what I did equals 25% into revenue, that is that particular year, enter, and I have dragged it. Okay, maybe it will be too much for you. We have solved 5 problems back to back. Okay, it might take a little time for you to revise, so please try to revise again, solve those 5 problems again. All right, and any doubts we will talk about it tomorrow, and tomorrow we will talk a little bigger than income statement, which is called as balance sheet. Don't lose hopes, it's not so difficult. I think once you just with fresh mind again go through my videos and try solving everything this by yourself, I think tomorrow you will feel much better and you'll feel it's very easy. Yeah, I think Madhuri, yours also correct answer. Yours also correct. Great, so we'll stop it here. I'll see you tomorrow at 4:30. Please practice, and any doubts you can just WhatsApp me. Thank you. Have a wonderful evening.